Good morning, members, officers and members of the public viewing the live stream of this meeting. Welcome to this meeting of the Audit and Corporate Governance Committee. My name is Councillor Michael Atkins. I'm the chair of this committee. My vice chair is Councillor Peter Sanford. I'll introduce other attendees when invited to speak. If you're in the chamber, you're reminded we are being live streamed. If you're joining remotely, please ensure your camera and microphone remain off unless addressing the committee. If you're in the room, please ensure your microphone is close to you and speak clearly when addressing the room. Item 1 on our agenda today is apologies for absence. Aaron, any apologies for absence today?
Thank you very much, Chair. We have one apology for absence from Councillor Richard Stobart. Our independent member, Chris Freeman, is taking part virtually today.
Thank you. Welcome, Mr. Freeman. Item 2, declarations of interest. Do any members have any interests to declare in relation to any item of business on the agenda today? I'll take Councillor Leeming and then Councillor Sanford.
Thank you, Chair. I am a town councillor at Camden Town Council.
Noted. Thank you. Councillor Sanford.
Thank you, Chair. I have my usual declaration as a non-remunerated director of Inner Street Housing, Trading in South Cambs Limited. Copy and paste from previous minutes, possibly.
Thank you, Councillor Sanford. Noted. Councillor Heather Williams.
Thank you, Chair. Also standing one, I'm a member of the Greater Cambridge Partnership Assembly, of which there are transactions and funds that have gone to them through the accounts.
Thank you, Councillor Williams. If any other interests become apparent later in the meeting, please raise it at that point. Item 3, minutes of the previous meeting. We have the minutes of the meeting held on the 17th of November 2025. Are there any suggested amendments to these minutes? Councillor Leeming.
Thank you, Chair. At the top of page 7, in the Treasury Management Performance, it mentions that Camden Town Council was repaying as expected. They have repaid the loan, so it sounds like it's ongoing, but it's actually completed. Thank you.
Yes, perhaps we could amend that was to has repaid, perhaps as expected, would be a fair reflection. Thank you. Any other amendments to the minutes? Okay, with that amendment then I move that these minutes are a true and accurate record. Can we take that by affirmation? Thank you very much. Item number 4 is public questions. No questions have been received. So we move on to item 5, the annual governance statement. Mr. Tully, can you please present your report? Thank you.
Thank you, Chair, and good morning to members of the committee. We are diving into page 9 of our agenda packs today for the annual governance statement 24-25 updates. So by way of just introduction, I cover that on page 10, but as a reminder, the accounting audit regulations require us to review our governance arrangements on an annual basis and provide an annual governance statement, commonly known as the AGS, to accompany the statement of accounts. And the purpose of it is really to communicate how we're complying with our Code of Corporate Governance. So by way of arrangements for reporting and approving the document, I cover the history of it so far on paragraph 12 on page 11. The key points, the committee, just a reminder, approved this document in its draft form on the 10th of July 2025. However, it is good practice to keep the document updated up to the point where the accounts are concluded. So there's opportunities to make revisions to the documents as we go along. This approach actually has been sort of recommended by SIP for now in their bulletins, and it's something that we've been doing locally since 2019-2020, so it's normal good practice to make amendments and updates. So for completeness, we've appended the annual governance statement to this report with track changes, so you can see what they are. And also for ease of reference, I've included a table that summarises those changes in the report itself. I would say they're not big changes, just really updates to existing of the sections of the annual governance statements, and that is good practice. The process at the end of this, we've got a track changes version. A final clean version with the track changes approved and removed will be published to the websites for ease of readability. One thing I would also sort of suggest with the Chair's sort of approval was proposing a verbal update because I received an update prior to me submitting the AGS and report to the committee agenda pack. It's a minor one, but one that I would recommend is probably worth including. And that is, there's some additional text that we could include in the transformation and new ways of working section as we received an update from MHCLG. This is actually, it's been included in the external audit report later on in the agenda, you'll see. And I don't like to make people jump around because it's a big agenda pack, but that's on page 189, or just page 13 of that report on its own, under the section for the four-day working week, and it just clearly explains the latest position. It's just a factual one, and it's one that I would propose just updating the AGS with as well. I'd propose that we insert that text on page 27 of our agenda reports pack, so just literally to the end of the existing text on that section. And I would say that it's a post-year financial event, but as we've got a section on that in the AGS, I think it's just good practice to keep updated and report the latest position. It's really just a factual update, and it's one that would also bring consistency with other items on the agenda. So I hope that's okay. If the chair wanted me to read out that text, I would be happy to do so. But
I think it might be sensible just to be absolutely clear what you're proposing to add into the AGS. Thank you.
So yes, it's in. So I'd suggest inserting the text, which is on page 189. It's the sort of last couple of paragraphs, and insert that in our section on page 27, and that is in October 2025. The Council received a letter from the Secretary of State for Housing, Communities and Local Government about the four-day working week. A meeting was held on the 24th of November with both Cambridge City and South Cambridgeshire District Council, and following that meeting, an email was received on the 29th of December confirming that there was going to be no further sort of follow-up from MHCLG. So just literally a factual update of the latest position there, which I didn't have at the time.
Thank you. Was there anything else you wanted to speak to on the report, or should we consider those points?
That's it, fine. I would just say, I suppose in summary, it's just good practice to keep the document updating, so that's why we've brought it back to the committee again, and just to repeat that we're going to update a clean version to the statement of accounts, and sort of put that on our website at the very end. Okay, thank you.
Thank you, Mr. Tully. I'd just like to invite any comments or questions on the proposed amendment to the AGS that Mr. Tully's outlined. So essentially copying the text that is in the auditor's report regarding the more recent interactions with the government on the four-day working week, and trying to achieve some sort of level of consistency between the two documents. Ms. Larkin.
Thank you. The only other thing I just think is just worth considering, so one of the things we often see in the AGS is the consideration of our findings, particularly around value for money. So we do have two weaknesses, and I know we've pulled out definitely the one around the accounts, but I think just worth thinking about the one around the oversight of the subsidiary and whether actually you want to pull that out, because we have acknowledged that as a weakness. So therefore, something to be thinking about whether that should also be feeding into the AGS. So make sure you've got that sort of consistent read across.
Thank you. I'll come back to that in just a minute. I'll just deal with this issue on the communications on the four-day week. Does anybody have strong opinions either way that they wish to express? Councillor Williams?
So I'm trying to look through at the moment to see if we've been all shared that correspondence that happened on the 29th of December. I can't see it as members. It'd be interesting to have that, if possible. What I was going to say is there was also correspondence, and there has been consultation that's happening before Christmas, where the Secretary of State, I believe it was, wrote to every council in England saying we do not approve of four-day weeks, and that there was going to be a consultation in the way things are drafted. So is that not a parameter? It might not be that for this moment, but under the new guidance, and if it's revised as a lead to in that letter, then that is something that the council should be aware of, or at least it should reflect that there is a consultation going to be happening, and that that is, because this sort of otherwise makes you sort of think everything's fine. Well, actually, if the guidance changes, then it reopens it not just for us but for everybody.
Thank you. Yes, I mean, so we do reference the. I think that's the same letter received in answer to the paragraph 4 in October 2025. Council received a letter. I assume that's the letter to which you're referring to from the Secretary of State.
Yes, it refers to the 29th. So the letter we had on the 19th, I think it was circulated to everybody. I don't think everybody's had the letter that was circulated on the 29th. We did ask for that to be shared. I'm not, if it has been, I can't find it. But I don't think in the commentary there is enough to the consequences of that letter. And that's what I'm saying, there is going to be a consultation and what that could mean. I think that is important for us to fully understand, because at the end of the day, previously they have said that they will deem it as a failure if you are doing, as they put it, part-time work for full-time pay. Now, if they are to start deeming councils as failures, that means they can then take over planning powers, they can take other resources away from us. So I do think that that needs to be in the consideration when it comes to governance. I'm not saying it will happen, but I think it should be stronger in there.
Understood. Yes, perhaps in the AGS, the summary, or at least the statement around the letter received in October needs to outline a bit of that in more detail. I agree it would be helpful if the letter received on the 29th could be circulated more widely. I don't know who has the power to authorise that, but if that could be circulated, that would obviously be of assistance, particularly to members of this committee. Mr. Tully, are you happy to take away, just thinking about how you can make sure that the comments made in the two sets of correspondence are accurately reflected in the AGS? And clearly, if clearly the communication received on the 29th of December, it's important that that's in there, but also I understand it's important that it's clear what that rules in and out from what we've been told previously, as far as we can divine from this slightly interesting range of communication that we're being presented with. Does that make sense?
Yes, thank you. No, it does make sense. I think we've got to try and keep it factual as possible for simplicity, bearing in mind that this is something that's happening sort of post 24-25. So it's just really just to try and keep people informed rather than talk more about perhaps some things which could be reported in the next AGS. So I think that's possibly the distinction to make, but I'm happy to take that away and reflect on that. But in principle, it's just about getting the committee's approval that we're going to update that section to reflect the latest position.
I mean, I think we all agree it's appropriate that it's updated to reflect the most recent correspondence. I don't see any objections to that. So I think we can. I think you can proceed with that. As to Ms. Larkham's point as to the weaknesses identified in the auditor's report and whether those should be also reflected in the AGS, that would seem to me to be a reasonable suggestion. Are you happy to draft something suitable and include that? Is the committee happy for Mr. Tully to do so?
Yes, I would suggest we actually have a section in the AGS for external source of assurance where we actually make reference to colleagues from external audits, and obviously it's just a matter of timing and can't write things in advance of receiving the reports and agenda, so we can make reference to the most latest report, and that will be a sort of signpost back to that for completeness.
Thank you. I think that would be appropriate. Any further comments or questions on the AGS? Councillor van der Ven.
Sorry. No, it's difficult. There's so much important detail that I think, instinctively want to reference. And I wanted to say how pleased I was that the low-income family tracker is referenced. I think that's page 17 of the report. I wanted to make what you might think is a silly comment, but the cover illustration of this report is one that kind of repeats itself, I think. It's interesting because over many years, South Cambridgeshire, which is a rural district, and farming is incredibly important in this district, but it's one of many factors, an increasing mix in our economy. And we talk a lot in the report about support for business, but we don't really illustrate that as a visual. And I was just thinking about how to find the balance, and I wondered if we could even have a rotation, but to be sure to, put that marker down, because that is a huge component in what South Cambridgeshire is, and it certainly is important in the national mandate for our growth. Thanks.
Thank you for the feedback on that. I'm happy to take that away and feedback to the comms team who helped me with the presentation of the document with images. So absolutely, good feedback.
Thank you. Any other comments on the AGS? Okay, we've been asked to approve this report subject to, I think Mr. Tully is going to make a few short amendments to it, and then it will ultimately be signed by the Chief Executive and the Leader of the Council. But are we happy to approve this report with those considerations? Thank you. We move on to agenda item 6, which is the approval of the 2024-25 accounts. Please could Ms. Ahmed please present this report? Thank you.
Thank you, Chair. So I'm pleased to present the final statement of accounts subject to any minor changes post KPMG's final checks ahead of the backstop date. We have progressed really well in the audit compared to the first year, and probably not exactly where we would have liked to be. There is obviously some form of disclaimer, and I don't think that's really a surprise to this committee. The team have made really good progress on the audit, and we've completed a number of audit items that we didn't in the 23-24 accounts. There has been a need to make some amendments to the accounts between the draft and the final post the audit, which are outlined in the report under adjustments. Just to note that paragraph 10, thank you to Councillor Redrup who pointed this out, and I think it was incorrect in the report that was submitted in July as well. I'm not quite sure what I was looking at the time, but it made sense. But that paragraph should really read to, paragraph 12 says that gives an overall surplus of 0.62 million. That should really read to say that it gives a deficit of £48,000. So HRA is unchanged from the draft set of accounts, and we added 1.141 million in year to the HRA, and I've noted presentation for a future report, which I've taken on board as well from Councillor Redrup. So the adjustments are explained on page 38 onwards. I did mention at the last audit committee there was a need for a realignment to the expenditure and funding analysis. At that time there was no impact to the statement of accounts. It was just a realignment of expenditure and income in that specific statement, so it had an ill effect. There has obviously been changes to the FA now, and that is primarily because of the impact of the changes that we have made to the statement for the audit adjustments that have been recommended from KPMG. There are a few audit adjustments primarily related to £110,000, which was not accrued at the end of the year. £760,000 adjustment relating to a historic entry. A classification change for a greening project, which was classified as assets held under construction, but the project was pretty much nearly completed and should have been recognised in other land and buildings. And there was an overstatement in debtor and creditors. There have been other presentational and disclosure changes, but overall that's been a change to the balance sheet by about £917,000. And I'm sure that KPMG will explain further on those adjustments in the next item. So really, we are hoping that the accounts can be approved, and then we will work between now and sort of the backstop date to get these finalised and presented onto our website and signed off by KPMG. Thank you.
Thank you very much. Are there any comments or questions on the 24-25 accounts? Councillor van der Ven.
Thank you. I'm looking at the section on affordable housing, which I think is page 7 of the report. I just wondered, given the kind of the term affordable housing, which we understand is something, of course, that often comes up in the general public. Is housing really affordable? I wondered if it would be possible to squeeze in a couple of words about the fact that the council is able to offer rents below 80% of market rate, if I'm understanding correctly. Just that the lengths to which the council has been able to go to increase the true affordability of what we call affordable housing. That may be too much detail, but it seems it is something that has been achieved by good financial management, if I understand this area properly. Thanks. I found a small typo, which I'll share after the meeting.
Thank you. Yes, do you think we can just add in maybe a sentence in that affordable housing section just to explain those recent achievements?
We'll certainly take it away and have a look at it.
Thank you. Councillor Lehman.
Thank you, Chair. This may be explained more fully. I think what I'm speaking about is the issue that's raised as a point in the auditor's report. But on the pages 106 through to 109, which is the group accounts page, every single entry in the column for skip has a zero balance, which seems unlikely. I can understand that there are a number of things that haven't happened yet, but I do know that the council has invested money there. Thank you. I'm just wondering why that is the case, why every balance in the group accounts is zero for skip.
Thank you. Yes, I think I found the reference. This is the G1, the context of group accounts, on page 106 that you're looking at. Simon, are you in a position to comment on this?
No, I'll have to have a look and come back to Councillor. Is that okay?
If I could just come in, just to confirm. So SKIP is a joint venture, so it's 50% owned with the council and Hill Partnership. So it's not actually consolidated into the group accounts. We did raise a recommendation in the prior year for this column to be removed. As you can see from our report, the consolidation work is still ongoing. So we'll raise the same recommendation for that to be taken out of the group accounts for this financial period as well.
Thank you. That actually makes a lot of sense, that it's not large enough to be put into the group because it's a smaller, we don't have a majority holding, I guess.
Yes, so it's about the ownership. So because it's a 50-50 equal hold, the council don't have full ownership, so that's why it's not consolidated.
Thank you. In that case then, I completely agree. Please could we take that column out, because it raises far more questions than it actually warrants. Thank you.
Yeah, I agree. We will look to take that out in the published version.
Okay. Thanks, everyone. Any further comments or questions on the accounts? Fantastic. So we've been asked to approve these accounts subject to potentially sort of further minor alterations delegated to the Section 151 officer in conjunction with myself. Obviously, if there's anything more major, I'll look to inform or bring the committee in more fully. But are you happy to approve the accounts on that basis today? Thank you. So we come to agenda item 7, which is KPMG's completion report. We're joined by Ms. Larkham and Ms. Townsend. Could you please present the report?
Thank you, Chair. So we've got two reports today on the agenda. So the first one is our sort of year-end report, which summarises the key audit work that we've done, and the second is our annual audit report. So I'll just take the sort of an audit findings report first. I think I'll start with just a comment on the opinion that you'll be getting this year. So as you would have had last week, so as you were, obviously last year you got a disclaimed audit opinion. This year we continue to have a disclaimed audit opinion, but I think what is quite important to note, and as we've set out on page 6 of our report, is actually the level of work that we have been able to complete this year has definitely increased. So we're on a journey in terms of rebuilding assurance, but I think it's quite important to note that we have been able to conclude a much greater area of work. So on page 6 we do set out those areas of work where we have been able to complete that work. So they include our work around management overrider control, all of our work over treasury, some work over the expenditure and income. So quite a big chunk of work has been completed. We do list out then the areas that we haven't been able to conclude on. So some of that is around the split of usable and unusable reserves, the work around valuations due to some challenges with the valuation in and of itself, and also some of the recoverability of the investment. So they're sort of the key bits that we haven't done. We do note on there that we hadn't concluded at the time of drafting this report our work around the actual group accounts consolidation and IFRS 16, and Jess can give you a little update as we've got to there. So whilst a disclaimed audit opinion, I think it is important that we acknowledge the work that's been done. Now that's not to say the audit has been easy or straightforward for everybody involved. It's still a challenging place to be, and we will continue to work on improving that process as we go through to next year. In terms of the next step on rebuild and assurance, we will be starting to complete sort of the first step of that rebuild and assurance, which comes through some risk assessment work, which we hope to sort of commence over the coming months, and we'll report back to you as to where that gets to. We have issued sort of the information list to management on that, but quite rightly we've been focused on getting these accounts concluded before we get cracking on that. So I just wanted to start with that position. I'll let Jess run through sort of the detail in terms of the audit findings and where we are in terms of those outstanding bits as well.
Perfect, thank you. So I'll take the full detail of the report as read, but very happy to give a summary. So just in terms, so page 129 of the pack, so page 7 of our audit findings report. If I just very quickly run through our conclusions over the significant risks. So we were unable to conclude over our work on the valuation of both land and buildings and investment property. For the land and buildings, this was due to difficulties with staff sickness. So we are expecting for next year to be able to get this piece of work completed, and we're already in discussions with management to make sure that that is the case going forward for FY26. For our findings on the valuation of investment property, we did identify a material error within the accounts, which we did not ask management to post as an adjustment because it was based on an estimate and our best case scenario of what we believe the misstatement to be. That was roughly about 17 million, and we do have further details which we'll run through when we get into our misstatement section of the report. Our management override of controls, we were able to fully complete this piece of work this year, and there were no findings to report in that area. Our report over the pensions is in progress but nearly complete, so there's just one additional piece of work over the disclosures that the pension teams are currently working through, so we're expecting no further issues with that piece of work. Our work over the fraud risk for our expenditure recognition, again, we weren't able to conclude due to difficulties with staff availability and also the TB mapping and identifying transactions within the report. Progress was made this year in this area, I'd like to note, so we were able to get a report back from management, which we were able to sample from, but that was quite a large sample, and due to the timing of the audit, we were unfortunately unable to get that piece of work concluded before the backstop date. And then finally, our recoverability of investments, again, that's noted as still in progress due to one piece of evidence that we were waiting for. That came through yesterday, so the team are looking at this now. And again, we're hoping that that would conclude this piece of work with the note that we're still disclaiming that due to the expected credit loss recognition within the accounts, which again, there's further detail down in the report. Just to then give another update on the outstanding matters that we have. So as I've already noted, the consolidation work is currently in progress. We've sent some final queries over to management and we're just waiting for a response on those. Pensions is nearly there, including the recoverability of investments. IFRS 16 we have now had, but it's confirmed that we'll be disclaiming this area as well due to timing constraints with our own staff to be able to get that piece of work completed. And then we are just waiting for that final set of accounts if there are any other adjustments that we are proposing. Just pause there for questions on the findings.
Thank you. I wonder if it's actually worth perhaps going through the report in detail, because otherwise I think we're going to jump ahead to what people want to talk about. So perhaps if you want to proceed with your presentation, and then we'll take questions at the end.
Yep, absolutely. Are you happy for me to run through each of the risks in detail? Is that helpful?
I think that would be a very good, good way to start. Thank you.
Perfect. So then going through the detail of the report, starting with our valuation on land and buildings. So we've just noted the procedures that we were and weren't able to complete. As I've previously mentioned, that was due to staffing issues and staff sickness within the finance team. We were able to perform additional procedures over this piece of work, but unfortunately we weren't able to complete our samples and get the information that we needed to be able to conclude over the valuation of land and buildings. For our valuation of investment properties, so as I've already noted, we did identify a material error in this area, and we are raising a recommendation to the council regarding the investment property valuers that they used, as the misstatement was driven by the assumptions used by the valuer to create the difference that we identified. I'd also like to note that we used our own internal specialists on our testing that we did over the investment properties. So if there are any specific questions, happy to take those away and get a response from our internal specialists on that, just because they have a bit more detail over the findings than we do. For the management override of controls, as I've said, we didn't note any, we didn't identify any instances of management override of controls based on the journals testing that we did perform. We have re-raised the same recommendation that we did in the prior year over the self-review of journals. I'd like to note that that follow-up finding is due to be addressed by management for FY26, obviously due to the timing of the FY24 audit. We only had a month left of the current financial period in order to get those recommendations in place, so we weren't expecting that to have been updated, but management have provided an update on that. I think it's on page 43 of our report. As I've noted, for the valuation of post-retirement pension benefit obligations, so our pensions work, this is almost complete. We've just got one area that we're waiting to complete over the disclosures, but there were no material findings in the recognition of the pension assets or liabilities. For our fraud risk from expenditure recognition, as noted, we were unable to complete this as we weren't able to finalise all of the samples that were shared with management. We have noted a finding based on this that we've again linked through to page 37 in our report, and I'll go through those in more detail when we get to that page. Our recoverability of investments, so as noted, there is one area outstanding in this piece of work which the team are working through now. It is noted, however, we are still expecting to disclaim this area because of the recognition of the expected credit loss within the accounts, as currently we don't think that it's actually recognising the correct impact for the investments that are held. And then very briefly, for the preparation of group accounts and then also adoption of IFRS 16, again, that work is outstanding. And if there are any major findings, we'll report on those at a later date.
Thank you. Do we have any comments or questions at this stage, please? Could you, for my benefit, could you unpack for me around the investment property? I don't feel I've quite understood the nature of the uncorrected uncorrected adjustment. I don't know. I don't know. Perhaps, Fazana, if you want to take a kind of make a first comment on this before I return to our audit colleagues.
I can try. Thank you, Chair. So it's an issue, but whereby KPMG's internal valuers have a difference of opinion on the way that the valuation has been conducted for our commercial properties. However, to point that this is not a specific issue to us, South Cambridge District, it's an issue whereby other authorities have also used the same valuer. We have been having a discussion with KPMG about the way forward, and management have also had an internal conversation about what we can do about this. Obviously, there are implications because obviously we have been through a process whereby we've appointed a valuer who has specified all the qualifications in this area and so forth. So there are implications about we can't just pull out of the contract, and I've been talking heavily with our procurement officer, and we've got measures in place for what we intend on doing, and also at this late stage it perhaps might be difficult to get other valuers in because obviously every other authority will be in sort of but we have taken on board what KPMG have discussed, and we have been having ongoing discussions about what we can do, and that's where we are with it at the moment. But I'll let KPMG explain the specific issue.
Yes, do you want to provide a little illustration? I'll come to you, Councillor.
Yeah, if I just give a bit of context to what we do, I think it's maybe just important around sort of valuation. So as just said, we have our own revaluation team. They're all revaluation trained, qualified valuers. And what we are required to do, as with any sort of item where you are seeking assurance, we have to challenge that assurance. We can't just directly rely and say, well, you had a valuer, so therefore they must be fine. We are required to say, is that valuer and the sort of specifically competent, etc., but also are the assumptions that are being used to create that valuation appropriate? And what we have found in this instance is when we've started to look at some of the basis for the valuations, which is often looking at market data, so various market points, etc., to say, well, actually, how do we come to that valuation? Our valuers have heavily challenged those assumptions that are being used in the valuation to get to the investment property valuation here. As Fazana said, this isn't something that is isolated to South Cambridgeshire. We have seen this across a number of councils and actually a number of different valuers, often because sometimes the valuers that are being used are maybe slightly smaller and don't necessarily have that breadth of market knowledge to be able to provide, particularly for those investment properties which are essentially a market value. So you sort of need to make sure you've got a broad breadth of knowledge and information to be able to make those valuations. So what we've got here is essentially based on the work that we've been able to do to the point, and again, recognising the backstop date, we've sort of had to say, well, actually, given what we've got, we think probably the difference is 17-ish million, but we haven't fully concluded that. We haven't gone and done a lot of back and forth with the valuer because of time. So I think for next year, as Fazana says, we're looking at various options, but ultimately, you know, this isn't to say you could never use this valuer again. It's to say that we would need more time to challenge and to work through how that valuation has been come through. But from our perspective, we do have quite a significant difference in the valuation, and that is mainly due to those sort of market data points, which we see as being a much broader requirement.
So just on the kind of understanding then, so this isn't a disagreement, say, about a particular property. This is about the kind of assumptions that are underpinning the valuations across the whole portfolio. Is that kind of fair? Is that a fair characterisation?
Yeah, I mean, for this, you've got quite a small pool of investment properties, so therefore, yes, it's essentially
all
it's all
affected.
of them. Yeah,
it affects all of them.
Yeah.
Thank you. I'll come to Councillor Heather Williams, then Councillor Levy.
Thank you, Chair. I'll just, on this particular issue, obviously, I feel like I'm becoming a little bit of a broken record around investment properties. I don't think there is enough oversight as sort of from a governance point of view, or if we deem that it's not right for this committee, then we need to refer it to scrutiny, I think, because whether we agree with one valuation or not, I think there is a broader, and this has been raised in previous external audit reports, that there is a broader need, particularly when we see what's happened in other local authorities, for councillors to have more awareness and more, not influence, but more sort of scrutiny or governance around investments with taxpayers' money. I think there is a balance to be struck because they are commercial entities and they need to run so, and so some things will be commercially sensitive. I don't think we've got the right balance as it is at the moment. We see a one figure, you know, of how the portfolio is doing in our accounts and things like that, and there are other breakdowns in some places, but I do think we should have a regular item where we just give some time to looking at how the investment portfolio is doing, and to have these discussions more depth rather than as a small segment of a huge area, because it's a lot of money that we've invested over the years, and successfully in some cases. Like all investments, there is always going to be some that perform better than others. But as things currently stand, as councillors and the ones ultimately sort of responsible for the authority, I'm not sure we do have enough oversight, Chair.
Thank you. Just to understand your point in more detail, I know that management have committed to bring a report around the kind of investments in joint ventures and subsidiaries, etc. Outside of the audit cycle, I don't know what information we would have about our investment properties to be able to scrutinise them, since, as it stands, clearly we're valuing them on a kind of annual basis. We could obviously look at them out of we could look at the investment properties out of cycle, but I don't know what information we would have other than the most recent set of values that we've been presented with.
How well are they performing? Are they, do we know if our properties are running at a profit or a loss? I'm sure they are going at a profit, but we don't see that. We don't know that. We don't know, actually, are the yields mapping to what we thought? Are we seeing properties that are overperforming or underperforming? Because all of this should be influencing our decision if in the future, if there are other properties and things that we wish to purchase or get involved in. The council not that long ago bought the business park, for example. Have we got tenants in all the buildings? Have we not? These are the sorts of things that I think from a sort of scrutiny and governance position we should be looking into. I think when it comes to the commercial activity in that way, I'm not somebody that is opposed to making investment. I think I have the original Ermine Street plaque, street nameplate in my office. It's something we're very proud of. But I do think there is a way to go with getting the accurate governance. And I think this then, we've seen it as well come through in external audit reports, not just today being flagged as an issue, but ongoing. I feel like it's a missing piece of what we're looking at. Not suggesting anything that's been done wrong, but as councillors, can we honestly say we know what's going on with those commercial investments? And I don't think we can, and I don't think that's a good position. And I think the authorities where things have gone wrong, when it's been looked at, it's one of the things that's been a major flag is that there hasn't been enough scrutiny, and that councillors didn't, look under the bonnet enough. They just sort of assumed everything was fine and rosy, and it turned out it wasn't. And I think particularly with LGR coming down the track, we need to know more than ever exactly where we're at and what's happening and what we've got and what the repercussions will be for that, because there is a deadline for when you can make further investments or when you can lose assets or sell assets. So with that in mind, if there are decisions that need to be made, they should be made sooner rather than later.
Thank you for your comments. I don't recall audit issues in the past, and I don't recall valuation disagreements in the past over our investment properties, unless I am...
Not valuation, Chair, but there has been reference that there hasn't been enough councillor oversight of investment properties. That's been over years.
I'll take your word for it. Councillor Leeming, you wanted to come in.
Thank you.
Sorry, Chair, and I'm sorry, Councillor Leeming, but for the lead member of finance to scuff and chuckle and so a member of this committee asking for governance arrangements, I do not believe is appropriate. Sorry, Councillor Leeming, but that was not appropriate behaviour from a cabinet member.
Sorry, I haven't done anything. I'm sitting here looking at my phone.
Thank you. Thank you, everyone. I'd like to proceed with looking at this report. Thank you. Councillor Leeming, please.
Thank you. So I noted in the report that it said that we're in a 3-year contract with these valuers. How far into this 3-year contract are we? Do we have 3 more years to go, or were we committed for 3 years and we might be in the first year? That's my first question. And the second thing is, given that it has caused the auditors to describe a material misstatement in our accounts, what grounds do we have potentially to get out of this contract? Because this is a reputational thing for us.
So it's a 3-year contract, and this is year 1's already occurred. So I'm in discussions with sort of the procurement officer and taking advice based on that. I think we need to give the valuers an opportunity to, so these issues obviously have not been raised with them via management. Obviously, KPMG have been raising them with these valuers. So I think we're looking to have that conversation first before we think about next steps. I think it would be unfair to just pull out a contract without sort of giving that sort of context first. But yeah, management is, you know, this has only come to light in, you know, since December, and we're exploring sort of next steps. But yeah, we're very aware of how this could implicate the accounts going forward.
Thank you. I'm just trying to understand what our parameters of movement are, given that this is the recommendation that we potentially get a new evaluator.
I think the other point, just to note on this, is that this issue that we are talking about now is isolated to the investment property. So clearly your valuer will look at the whole population of valuation. So we haven't concluded all of the work over the valuation of the full property. So I think we just need to be mindful that the issue we're talking about here is around market valuations, which are limited to those investment properties. So, you know, I think we're just mindful that it's a very small population that I'm talking about right now.
Thank you. That's actually a really important distinction. So generally, this isn't a concern, but with the investment properties, that slither of valuation, that's where your concern lies.
Well, we haven't done the work over the other population. That's what I'm saying. So I can't confirm or deny at this point in time. But I think that this issue particularly is just on that small population.
Thank you. Just looking at the balances of the investment properties, I think at the end of 2024, at 1st April, as it were, the valuation was it's sort of 173 or potentially 170 million, depending on whether I'm looking at exactly the right figures, and we're reporting 193 as the fair value for where we ended up at 31st of March, if I've got those correct. And there are also nearly 19 million of additions. So I'm just trying to work out the sort of effective narrative change of the disagreement between the valuers. So the figures on the account, if we strip out the acquisitions and disposals, suggest that the properties are sort of underlying increasing in value, and but on the figures provided on the assumptions used by KPMG's valuers, they would be decreasing in value. Have I understood that correctly?
Yes, so just to come on this, so the figures you're quoting are the group values. Obviously, we only do the audit for the council and then the consolidation work over the group accounts. So we're unable to comment on the values quoted for the other entities in the group. For the council, it's 54 million, and we're proposing that is overstated by 17 million.
So the net effect then would be that would they then have lost value by those valuations over the kind of past 12 months, is that?
Yes.
That would seem to be quite a significant disagreement then between the two sets of valuers that is quite important for management to understand the basis of. What information, obviously beyond the disclaimer in your report, what information will you be presenting to management to kind of understand the kind of rationale behind these differences?
So it's not really so we have explained our position. So what we haven't been able to do, so in a normal year where we weren't, with a backstop date looming, what we would be starting to do is having a lot of discussions with the valuers. We would be going back and forth in terms of saying, well, this is our thing, this is our view, why not? And you would normally then have recalculations and reworks and various positions. Because of time capacity, we are not doing that this year. That doesn't mean for next year that we won't be doing it. But I think the point is that this is not something we have only seen here. So we do feel that there are some broader issues to think about in terms of, that capacity to be able to value some of these properties when you are not using, you haven't got access to all of that market data and you're relying on other things. And I think it is important to note as well, I think the council itself has had some other reports and work done where we've seen a difference in valuation as well to some of these. So it's not just a one point of reference that we're referring to here. So it is a challenge. We need to work through it, and I think the key thing for next year is to say we will start this early. So as soon as we get the valuation report, we can get going with those conversations and make sure that we've got the time to have the proper challenge if we go with this valuer next year.
Thank you. Are there any further comments or questions on that before we, I think we still have some further elements of the report to go through. Councillor van der Ven?
Thanks. Just could you say just a little bit about local government reorganisation and how it might figure in your report next year? I feel a real lay person in this on this committee, but if you, I'm just sort of surprised not to see it mentioned more, but maybe everything's in just incredibly well managed, and we can look forward with real clarity. But I should think there is some risk there that at least, or if there isn't, there are many unknowns on the horizon. So just a little comment about that would be great.
Of course. So LGR, well, two things. If we just start by reminding ourselves that this is looking at the 24, 25, too many years, 24, 25 year end. So actually in terms of the impact of local government reorganisation for the 24, 25, very limited. This report that we're touching on now is around the financial statements. So again, limited impact at all. What you might see creeping in going forward is some additional costs, etc., that we would look at. The bit where we will consider local government reorganisation in more detail is our work around value for money. So you will see that's the summary of which is in our second report, our annual audit report, and which came to a previous audit committee. So what we look at for value for money is around the arrangements in place around governance, financial sustainability, and securing economy efficiency and effectiveness. And that is where LGR starts to fall into. And again, looking at 24, 25, limited sort of actions actually during that year, but it will start to come in more in that reporting in terms of understanding what is happening across the organisation in terms of preparedness for that. And I think quite key, one of the things that you want to make sure is that decisions are still being made, so that local government reorganisation is not a reason to halt things. So that would start to be looked at, and I think we are expecting some changes to what is AGN 03, which is essentially the governing sort of document that we work to from the National Audit Office, which will more sort of clearly say that we have to consider local government reorganisation. So certainly for next year, it'll start to creep in, but even more so the following year, we'll see that.
Councillor Heather Williams.
Thank you. I love the optimism that Councillor van der Ven said about the sort of government being very organised in LGR. I'm afraid I've become cynical of my 8 years here, so I respect the optimism for somebody as long service as yourself, but I have complete faith that it will be carnage at times in government. So I think it's a very valid point. I know that might shock you, but I've become very cynical. Chair, that when it comes to looking actually, again, that might be something that we want as a sort of a separate item to look at those repercussions. Because even if you look through, obviously we've had scrutiny the other day for the budget reports, there are so many unknowns. And there are so many unknowns that are going to financially impact the council. And that doesn't matter whoever's in control of here, it makes no difference. It's going to be, at some point, expensive to somebody somewhere. And no doubt it'll be us. Because the county councils don't have the funds to do it. So that's the whole point, in my view, Chair, what they're trying to do. It's a short-term fix, and we'll all end up poorer for it. But on the topic of expenses to the council, am I able to ask a question about page 156 of our agenda, which relates to fees? I'm afraid it is my topic of mastermind topic of choice.
If you hold fire just for a moment, we might permit them just to present some more of the report and get to that point, and then you may may certainly ask you a question.
So would you bear me in mind when we get to that point, Chair?
Certainly shall.
Thank you.
Shall we resume where we got to? Thank you.
Yes, thank you, Chair. So then picking up back at page 146 of the pack, so page 24 of our audit findings report. So that just summarises our findings over the accounting estimates and management judgments. I won't go through the land and buildings and investment properties again because that basically pulls through what we've already discussed. But just to confirm, so we found no issues with any of the other estimates that we performed work on over within the period. So that includes the work on the short-term business rates provision and then also the pensions findings as well. Just then touching on very quickly the other matters. So to confirm, the work over the AGS, as already mentioned, is still ongoing. So Emma's already raised the comment regarding our second finding for our value for money work. So we'll wait for the updated version of the AGS and then conclude that piece of work. And appreciate there's a bit on fees there as well, but happy to come on to that for page 156 once we get to that within the report. It's also just to note that we are not able to certify our audit as complete yet as part of the whole of government accounts and NAO work. This is the same as the prior period, and again, we'll be working through the same guidance that's issued from the NAO in terms of certification of the audit. I'll then I'll then hand over to Emma just to pick up the value for money findings.
So yes, so we've got the value for money summary here essentially. So the full detail is in the annual audit report, but we can so that's full detail has come to you previously. This is just a summary of those key recommendations that we have previously raised. So the first one is around the preparation of the accounts. So as we have acknowledged, there has definitely been some improvement in the accounts, but we still have had a number of challenges this year. So key things that we've just pulled out there was obviously the IFRS 16 was not included within the draft set of accounts and has only recently been concluded. Similarly with the consolidation exercise, and we've also struggled quite significantly with some of the mapping. I think for all of those, it's fair to say that for next year we would expect, IFRS 16 has been done now, so that will just be a case of updating and rolling forward, and equally all of the mapping challenges, we know where we are with that now, so for next year again will be a much cleaner process. I think there is, as we've said again, we've had some capacity challenges, so I think it is important that this risk and weakness stays here to acknowledge some of those challenges, but we do acknowledge that work has been done throughout the year and post-year end in terms of trying to address some of these challenges, and the accounts obviously were prepared in line with the deadline, which was a significant improvement. So remains a weakness, but I would say probably less weakness than maybe what it was in the previous year. And the second one, which we discussed at reasonable length at the last committee, is around the recoverability of investments. So this is around making sure that there is appropriate governance and oversight over investments in those subsidiaries, and making sure that they are sort of really challenged, and in particular making sure that the performance of those investments are really understood and there is good reporting. And that does come back, so Jess did mention earlier that we have we won't be concluding around whether there is effective credit loss around those investments, and they are quite interlinked in terms of how that performance works as to whether there should be any effective credit loss recognised. So we've had a discussion with Fazana as to what that reporting might look like. So again, absolutely feeling that management have brought into this recommendation, and we would expect to see that improvements coming through next year, and aligned to that, we will be able to conclude that work around the ECL hopefully next year. All of that detail behind those recommendations and our other conclusions of value for money, as they have been presented to the committee previously and are in that other report in terms of the annual audit report. If I just quickly on the appendices, I guess most of them are just for information. Jess can touch on the adjustments if needed, but if I just touch on the audit fee, maybe just because we just mentioned that. So the scale fee is the 180, that is what is set by the PSAA. That does include this year the ISA 315 work, which was a separate fee variation last year, so that's one of the drivers to why that you see that increase in the prior year. We do have a number of fee variations which we are in the process of agreeing with management. They total around 75,000. Some of those are what I would say are sort of standard fee variations, which you'll see across nearly all of the organisations this year. So they relate to two new accounting standards, so one being the IFRS 16, and sorry, the other is an auditing standard. The other one is ISA 600, where there was a change in how we look at group working and scoping, as well as the sort of disclaimer work that we will have to do. And then there are some others which are linked to some of the delays and some of the challenges we've talked about today. But say we will agree those in detail with Fizana over the next couple of weeks. And I'll probably pause there unless anybody wanted with the control deficiencies. I think we did bring, didn't we, to the last audit committee.
The follow-up, the new ones I'll run through, but happy to pause for questions on the fees first.
Yes, just on the fees, would you be so good, very roughly perhaps, the fee variations that you were in discussion with management, you said totaled approximately £75,000. Do you have off the top of your head a rough breakdown between those which related to new standards and the disclaimer, and those which related to sort of delays, overruns, information deficiencies, that sort of, if that's a reasonable category, sort of set of buckets?
Yes, I'm just opening it now, but off the top of my head, it was about 45k of kind of delays and kind of fees that we've had to pay because we've done additional work or anything else, and then it was about 30, I think, that was the standard, but I'm just opening it.
Okay, thank you. Do let me know.
Yes, that's correct.
Figure. Councillor Heather-Williams, did you wish to make a further comment at this stage?
Yes, I've got a question on on page 166 as well, but the fees was mainly like, because 180,000, we all accepted that the scale fee actually previously was quite low, and so I kind of understood where things were going, but the whole idea of it, I think the scale fee went from like 55,000 to 180,000. It had a significant jump, which wasn't argued with by councils, but there was a sort of hope that money wouldn't be clawed back in other ways, and that was appropriate. So I was going to ask for a guide whether we're looking at the to be confirmed 4-figure, 5-figure, or 6-figure as it has been in the past, because obviously that makes quite a big difference. And then I had a question on page 166 and one of the sort of breakdowns, but happy to raise that now, Chair, or wait if you so wish.
No, we'll take it now.
So it was just on page 44 on risk 4 about record keeping. Potentially some curiosity there. It says about, wrong one, about the bank accounts. One above, 43, number 3. It says the recommendation about bank and investment reconciliation should be prepared and reviewed sort of regularly and timely. Now, somebody like professionally, I mean, we don't submit a VAT return, we don't do anything. Monthly bank reconciliations are key. So is it just sort of an isolated in one area, or is this not routine practice? Because that is a little bit like nails down a chalkboard for me. It's just a matter of completeness to do things monthly, but there could have been a reason for it.
I might invite Ms. Ahmed to comment on that.
Thank you, Chair. So I think if you look at item 4 under the recommendation, it says particularly to do with regarding investments and grants. Initially, that recommendation stems from 23-24 based on, obviously, we had quite heavy reliance on interims before, as you know, and that understanding within the team was a little bit limited in terms of doing sort of the outturn and how that linked into the statement as such. And I think we've built on that knowledge over the last year, as you will be aware that, you know, it's the first year we've taken on sort of that liaison between us, management, and the auditors themselves. We've had very less reliance on interim staff. So that record keeping is getting better. I don't think it's specific to like bank recs or certain specific, I think it was just kind of overall in terms of the evidence we were also providing to the auditors. But we have a marked improvement in that area now.
If I can clarify, thank you for the record keeping. It was also number 3 above on control account reconciliations. The recommendation we recommend, it says that one investment reconciliation was performed in March 2025. I'm guessing that means that was one for the year was done in March 2025 rather than monthly. So was it just a one-off in that particular instance, or is it now part routine?
So I think previously where we were playing catch up with the accounts, it was not possible to sort of always do reconciliation in the timely process. That is now being embedded within the team, especially where we've got handover. So yes, you're correct.
Lovely. Who doesn't love a monthly bank rec?
Thank you. Any other comments or questions at this stage? Thank you. Do you want to just step through any kind of just remaining items then? Thank you.
Yes, thank you. Happy to run through the corrected and uncorrected audit misstatements, but I think Fasana gave a good summary on them. But if there's any specific questions, happy to take those as well. I'll then just touch on the 3 control deficiencies that we've raised for this financial period. So obviously we've already discussed the investment property valuer, and as Fasana said, we're in discussions to confirm what the expectation is for FY26 and what we need to do going forward. We've also then raised 2 medium risk recommendations related to documenting a formal impairment review over the assets, and then also that there was limited management review over the valuation of property as well. I won't run through the other control deficiencies as these were taken to the last committee, but happy to take any questions.
Thank you. Any final comments or questions on the auditor's report, either there or anything else that we've that hasn't been covered elsewhere? Councillor Lehman.
Thank you, Chair. In this the financial year that we've just read, not our current one, there was the introduction of IFRS 16 on leases. Are there any new accounting standards or regulatory requirements that will impact the existing financial year's reporting? Is this something that we should be preparing for in terms of technical disclosures?
No. Just checking Jess is saying yes, no as well. No, not for this current year. I mean, there will be a few small updates to the code and various bits, but nothing significant like IFRS 16. It is worth noting, obviously, we won't have audited the IFRS 16 numbers this year because we've only just received them. So we will do that work around the IFRS 16 implementation. Next year, we'll go back to these numbers to make sure we're happy with the point of implementation.
Thank you. And my second question, which is sort of alluding to other people's points raised before, do you anticipate receiving technical guidance from national government about how to manage local government reorganisation?
So clearly, what we are sat on, we sit on a lot of the national technical forums. So we do get the sort of guidance and steer as to what might be accounting issues, essentially. And I sit on the Value for Money Tech Net as well. So that point around how we might consider LGRs from a value for money perspective is being coming through. And I say there will be some amendments to from an auditing perspective, what we need to consider coming through that way as well.
And one last question along that line then. So for us as a council to prepare for that, I know you've listed audit recommendations as a general point, but which of those do you think would be the most important for us to consider in the view of what's on our horizon?
That's quite a big question. I mean, I think one of the things with any essential, reorganisation, merger, any of those sort of organisations coming together type situations is around making sure you have good, solid information that's going into the new organisation. So I think where we are recommending improvements in process, improvements in governance, they are things you want to prioritise. You want to be able to say, right, this is our year, this is our finishing position, and this is where we know we're going into. So I think it is around, I would say all of those are, they're around core financial controls and processes. So I would say all of them need to be put in place. And, you want to be able to have a set of accounts which is as far as clean as we can possibly get to, so that you have full assurance, or as much assurance as you possibly can have, that those numbers are accurate. In terms of the sort of the broader organisation, I think there is something I would say, I think it is really important that you make sure you have governance and oversight over those investments that you've got in terms of your subsidiaries. They're not whilst they are wholly owned subsidiaries, you need to make sure you understand what is happening with there and there is appropriate oversight over there, because that is where you can see things go wrong, is where there isn't that high level of governance. So I think that one is really important, that you get that improved governance and oversight over that. But say from a financial perspective, those controls, you really just need to try and make sure you've got a strong control environment as you possibly can have, and that's making sure Fazana's got the team in place to be able to do that, with the capacity to do that, and that, I can see that there may be challenges in some of that in the whole environment that you're going into.
Thank you for that answer. Thank you, Fazana and the finance team, for your work. It's really good to hear that improvements are running through this, even though we still have some way to go. Thank you. And thank you for all your work.
Thank you. So we've been asked to note this report, and we have done so. Thank you very much to our colleagues from KPMG for attending today. We really appreciate your presence here. Item 8, matters of topical interest. Do any members or officers have anything they wish to raise under this item that's not previously been considered by the committee? Thank you. So the next meeting of this committee is due to be on the 19th of March, and I close this meeting at 11:17. Thank you all very much.
Thank you, Chair.